Good evening, traders. This is Carlos over here at GAR Capital for our weekly video recap, another edition for the October 11th, 2015 trading week. Start ahead with the risk advisory. All trades are assumed with the risk of possible loss of capital. Use information at your own risk and practice proper risk management as well as risk tolerance toward your account and margin requirements with your broker. Well, sometimes you are the hydrant and sometimes you're the dog. And this week we kind of were the hydrant. So we had a little bit of a loss this week. We lost a little bit of our profits, but just like anything else, we come back and we do well, just like with NFP 2 weeks ago. The Euro USD was since soaring due to the Federal Reserve minutes, and the Fed's hesitation still on raising rates in 2015 and possibly delaying the hike of the rates until 2016. That in turn brought down the dollar being to the lower level that it was in comparison to the euro and the Canadian dollar. Some of our trades were euro dollar long and euro dollar short and US dollar Canadian dollar long. So that's where we kind of had most of our losses with those two trades. We were playing mostly the retrace and the bounce. Didn't really work out for us, especially with oil moving with the USD CAD. Rising oil price in WTI broke the $50 handle this week. I think it settled down below around 48. So with that being said, the market kind of ignored the not so stellar Canadian employment numbers that came out on Friday. So it looks like correlation is in play. Correlation with the USD CAD and WTI. So when WTI goes up, USD CAD goes down. When we start getting some more sellers in the oil markets, we'll have to go ahead and get into dollar CAD long. So that's what's been going on right now with that trade. I'm looking at it right now live, and it's trading about 129.43 at the moment. Um, pretty pretty flat session so far this Sunday evening. Our current month results: we went from a profit to lost a nine. We're down 9 pips. We still have a 55% win-loss ratio, but due to our wide pip spreads, we like to have a wide spread for our stop losses to keep away a volatility. So with that, we went ahead and did have a little bit of losses there, but nothing we can't come back from. We just basically lost profits that we made earlier in the month. But as you know, guys, this is a sprint. This is not a sprint. It's a marathon. This is what we do. As traders, we saddle back in and make sure we have our good analysis and prepare ahead of time. We had a couple of half positions on euro dollar long, which got our losses, but we made it back a little bit on pound CAD, dollar yen. But the last couple of trades, we had one break even on the dollar yen, and then the euro dollar was the one that about a 99 pip loss. That was the second biggest loss that we had this week. So again, when it goes against you, it goes against you. Can't really do anything about it. Just got to roll with it. Stick with your stop losses. Stick with your profit targets and what you feel comfortable in taking profits and what you feel comfortable taking losses at the end of the day. If you see something that's going against you and you just have that tight, emotional kind of feeling with any kind of trade where you don't feel comfortable, I always advise to always close and liquidate your position. That's always the best bet. With that being said, again, we're looking at long term. Right now, we're a little bit in the red, but I have a good feeling. Definitely next week when we have our Sunday meeting, we're gonna be singing a different tune. We're definitely gonna stay positive. We're gonna stick with our analysis. We're gonna keep looking at charts and working hard and finding opportunities for low risk, high reward trades as always. So with that being said, let's go ahead and look at the upcoming week. Excuse me. Tomorrow, FOMC Lockhart speaks. Same song, different dance. Whether it's Bill Dudley or anybody, Fed probably ain't going to raise rates this year. And that's what we're kind of pinching to the dollar on. So the Bank of Canada, Governor Paulos speaking as well. It's going to be on a delay for about 15 minutes. They'll have the script ahead of time. Again, nothing really much to go about other than them cutting rates due to the Canadian economy. But as long as WTI oil increases, it's going to help the Canadian economy. So we really don't need to be thinking about the governor speaking. Um, NAB business confidence in the Aussie. Aussie's been killing it. It's been just roaring, roaring, roaring higher, with a risk on environment, meaning the market is definitely having a little more risk appetite, and the Aussie dollar is the catalyst. So when times are good, equities are up, like the Dow already crossed 17,000, that psychological threshold of 17,000. You can see how the Aussie's correlated to those kind of traits. When the equity markets, Dow Jones, Nasdaq, S&P 500, the DAX, those guys go up, the Aussie dollar goes up for that risk on appetite. That goes with your Kiwi, New Zealand Kiwi, and the Aussie dollar. But again, do not forget the Aussie dollar got hammered a couple weeks ago with the Chinese data, economic data, and their problems. We all know that China's been having some issues lately. Aussie dollar, they're number one. Well, the Aussie's number one trade partner is China. So that's a big correlation there that we need to keep a look at. So Aussies, we have the risk on environment and we have the Chinese factor. So that's a couple of things we need to look on. But right now, Aussie is roaring at the moment. Let me go ahead and get a spot check for you guys on where are they at. Aussie dollar. Aussie dollar is now basing on a 15-minute chart at 73.22. 0.7322, so definitely higher at this session. Looking good all around for the Aussies. All right, let's go ahead into Tuesday. We got the trade balance for the Chinese. We got CPI for the Brits. We want to keep a look at that at 4:30 in the morning. We'll be up for that. And we got CPI. I want to go ahead and circle this on my calendar for the Chinese. The Chinese CPI, that's a number I want to look at, especially if we're trading Aussie this week. I want to go ahead and look at that and see if maybe we can make some money if the Aussies do go down or if it goes up. Let's go ahead and see how it goes with that information. Unemployment rate for the British, PPI, retail sales, core retail sales. Again, the American economy isn't doing bad. So that's not the reason why the dollar's going down. Dollar's going down is because you actually have sellers in the market that are just moving from dollars to other currencies. The dollar has been just the hero, the king dollar, as we all know. It's been rising above other currencies for quite some time now. And just like anything else, it doesn't last forever, of course. But with that being said, the rates, the Fed is what everyone's looking at for the US dollar. Uh, good core retail sales and retail sales and core retail sales, if they're better than expected and inflation is still relatively low, we're gonna go ahead and see there's another push to the Fed, excuse me, to increase that rate. Unemployment change for Aussies, again, another day. We got CPI, core CPI and employment numbers like every week. We got Philly Fed. Crude oil inventories, 11 in the morning. That we want to see too, especially for the Canadian dollar trades. CPI New Zealand dollar, New Zealand Kiwi, Canadian manufacturing, and University of Michigan consumer sentiment. Consumer sentiment has been great for the dollar. Has been great all around. It's been very high for the Americans, but it hasn't really translated in being bullish for the dollar. Again, what's being bullish for the dollar or bearish for the dollar right now is sellers in the market and the Federal Reserve. Everyone's moving their money to euros or moving over to risk on currencies. That being said, we want to see if we want to get a reversal on that from the highs so we can make the difference in the spread. So that's our week we have ahead of us. Let's take a look now at some charts. This is our US dollar chart, euro dollar chart, excuse me. Definitely basing back here. See that rise that we had? Kind of hurt us there, but still on a 4-hour chart and a daily chart, still basing. Still not seeing much of a difference. Our target is right over here at 108. Right here. Definitely could come back down. But we're just going to play it by ear. 114 around that area is where we're at. A little bit of a resistance here on the daily. And again, resistance on a 4-hour. It's already starting to hit a little bit of that ceiling. And a 30-minute chart, we see a little bit of a base. couple pivot points here to indicate a rise. We are still sellers of euro dollar though. With that being said, I just don't see them. I just don't see that being maintained. And with the dollar, Canadian dollar, I just don't see the oil buyers still keep it going up. Oil's still cheap. The Saudis are still pumping. I don't see Canadian dollar rising with the oil prices still rising above 50, 52. I, we'll just have to play by ear and see what happens. And we'll go from there. And we'll look at our charts and make sure what we have going on is feasible for the market and feasible for our trades. So again, guys, rough week we had. We're gonna throw it behind us. Next chapter. We still got about what 20 days until Halloween. No, excuse me, 20 more days till Halloween, end of the month. We're gonna get back there. We're gonna grind. We're gonna work hard and make sure that we find some good trades where we can do the damage we need to make so we can hit our goals. So guys, keep in mind proper position sizing. Make sure that you have your risk tolerance on what you can do. You know, anytime you feel that you're having a little bit of a rough patch in trading, I want you to lower your position size. Maybe go half a position. A lot of trading is psychological. Those quick hits, that winning streak is extremely, extremely important. It's almost like shooting a basketball. You just get that rhythm in trading. And, we're not machines, we're human beings. We make mistakes, it's how we respond, it's how we learn from them. So we're just going to go ahead and set it up for this week. Join us if you guys are interested in our signature service signal and analysis. Make sure to email me, garcapital@gmail.com. Follow us on Twitter @garcapital. Follow me on Instagram @garcapital. And if you like what you saw and you want to see more of our videos, subscribe to our YouTube channel. Click like below or leave a comment if you have any concerns or comments. And we appreciate your time as always, guys. I'm signing off here from the East Coast of the United States. To all my friends in Europe and in Asia, I hope you have a great morning. Let's go ahead and get that cup of coffee first thing in the morning and have a great trading week. I will talk to you guys on the WhatsApp trading chat room or through email, and I'll see you guys on Instagram, Twitter as well. You guys have a great evening or a great day. Love talking to you guys. We'll see you guys later.